Welcome! In this video, will ZBCN coin rally again? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand.
When we evaluate price movements from a long-term perspective, it becomes clear that a highly notable pattern has formed in the past. Specifically, during a certain period, the price moved sideways with low volatility for some time, followed by a sudden and high-volume upward move. Such structures are considered highly valuable reference points in technical analysis. While markets may offer unique scenarios, the tendency of past price patterns to repeat is one of the core principles of technical analysis. This horizontal consolidation, followed by a vertical breakout, is typically associated with an accumulation phase. During this period, the price remains compressed within a narrow range, volatility decreases, volume remains low, and there is widespread indecision among investors. However, this indecisive phase is actually a strategic window for large investors. Institutional players often accumulate large positions gradually in these sideways zones without moving the market. Once the accumulation is complete, a strong and sudden upward move usually occurs, creating an almost explosive effect in the market. What's striking in the chart is that this type of structure has happened before. In the previous scenario, the price moved sideways for an extended period, and then quickly moved significantly higher as the energy from the consolidation phase was released. Now, a similar picture is developing again. Price is once more moving within a narrow range, volatility is low, volume is weak, and market participants are again in a state of waiting. From a technical standpoint, this suggests a potential repetition of the previous pattern and signals the possibility of a similar bullish scenario. These recurring structures are often referred to as fractal behavior. Markets sometimes repeat the same movements across different time frames. This is one of the strongest foundations of technical analysis. When investor psychology, expectation cycles, and liquidity movements are examined, it becomes clear that such repetitions are not coincidental, but the result of a structured process. The similarity between the current sideways action and past price behavior is drawing attention to the potential for an upside breakout. In addition to the repetitive nature of sideways movements, these types of price structures often precede a volatility explosion. When the market is compressed into a narrow range, it behaves like a coiled spring. Once direction is determined, the energy built up during the consolidation phase is released all at once. The current consolidation could be part of this tension-building process. For this reason, investors should see this quiet period not as uncertainty, but as an opportunity. Moreover, details from the previous sideways movement, such as how long the rally lasted afterwards, which resistances were broken, and when volume increased, can be compared to the current setup. If the similarities extend beyond just the sideways movement and include volume behavior, technical indicators, and market psychology, the likelihood of this scenario playing out becomes even stronger technically. During these types of consolidation phases, in addition to institutional accumulation, the patience of retail investors is also tested. Prolonged sideways and directionless movement causes many investors to lose interest, close positions, or remain on the sidelines. This reduces liquidity and keeps volume low. However, it also sets the stage for larger moves. When positions are low in the market, big transactions have a more significant impact, making directional moves much stronger when they occur. The current price behavior appears to be progressing similarly. Some investors may have stepped away from the market or reduced their trading volume due to the dullness of this sideways phase. However, this is quite typical ahead of a strong upward move. The quieter the market, the greater the impact when movement begins. In conclusion, the current chart structure may be showing the formation of a new version of the previous accumulation breakout pattern. Just as the price experienced a strong upward move after a prolonged sideways phase in the past, it may now be gathering potential energy within a similar structure. Technical indicators, price behavior, volume activity, and psychological dynamics all support this scenario. If the resistance level of this sideways band is broken to the upside, a strong rally, similar to the one in the past, could be triggered. This move might not only be a short-term breakout, but also the beginning of a new trend. Therefore, this horizontal consolidation zone should not be seen merely as a waiting area, but as a high-potential preparation phase for investors. However, we can't make a decision based on this analysis alone. Let's take a look at other metrics as well. Stay tuned. The current structure observed in the chart reveals a healthy price movement that delivers important signals to market participants. This formation is commonly referred to in technical analysis literature as an uptrend, one of the most positive and sustainable types of price behavior closely followed by investors. Such formations occur when the price consistently creates higher lows and higher highs over time, steadily moving upward. This is precisely what is happening in the chart in question, as the price is climbing upward in stable steps along a specific trend line. Uptrend lines are considered dynamic support zones. This line acts like a path that the price touches after each correction and then resumes its upward movement. From a technical perspective, regular touches to such trend lines indicate that the trend is healthy and strong. In other words, the price doesn't just move upward in a straight line. It pauses occasionally for breath through pullbacks, but each of these pullbacks ends after touching the uptrend line, and the upward movement resumes. This shows that the market is advancing in a controlled and vibrant manner. Currently, price action is repeatedly approaching the uptrend line at intervals, touching it or getting very close before continuing upward. This behavior suggests that investors are opening long positions with confidence in the trend line during each pullback, thereby driving the price higher. Professional and algorithmic traders especially rely on the continuity of such structures, and whenever the price nears the trend line, trading volume increases. This in turn triggers upward momentum. These consistent touches to the trend line are significant not only from a technical standpoint, but also psychologically. This line serves almost as a subconscious threshold for investors. Every time the price approaches this threshold, investors tend to react with buy-side reflexes. This means the line is not just a visual element on a chart, but also a symbol of confidence in the market. Each touch reaffirms that confidence and confirms the upward movement. The fact that the price is advancing by touching the uptrend line also indicates that the market is rallying in a healthy manner. Extremely sharp increases often prove unsustainable and result in sudden pullbacks. However, when the price rises again after each correction by bouncing off the trend line, it shows that the rally is proceeding steadily and digestibly. This creates a safer upward environment for investors. To assess the sustainability of the uptrend, in addition to the touches to the trend line, the volume behavior during those touches should also be monitored. If volume increases each time the price approaches the trend line and the price begins to rise again, it indicates that the trend is strengthening. This suggests that the market is aware of the trend and large investors are using this trend line as a reference point to expand their positions. The upward slope of the trend line also signals the price's determination to reach higher levels over time. The more consistent this slope is, the more confidence it instills in investors. Furthermore, such trend lines show not only that the price is targeting the specific level, but also that it is progressing within a stable structure throughout the journey. In some cases, the price may briefly break below the trend line. However, these breaks are usually temporary and the price quickly moves back above the line. This proves to investors that the trend line is a strong support zone not just visually, but also psychologically. Therefore, uptrend lines are crucial not only in technical analysis, but also for understanding investor behavior.
When examining the market chart closely, it is clearly observed that a highly critical price behavior is forming around the 200-day exponential moving average, a level of great importance in technical analysis. This level is a high-value strategic indicator used by many professional and institutional investors to determine the direction of the long-term trend. Therefore, the price approaching or interacting with this level often contains deep clues about the direction of the market. In the current technical situation, it is clearly seen that the price is positioned just below this long-term average and is attempting an upward move to break through this level. This behavior signals growing investor interest, an effort to overcome this important technical barrier, and the potential formation of upward momentum in the market. The 200 EMA acts like the long-term pulse of the market. Prices trading below this line are generally considered weak or in a downtrend, while movements above this line are viewed as the beginning of a strong and structural uptrend. This attempt to break above the 200 EMA is not merely an effort to cross a line in technical analysis. It is also an indicator that market perception is changing and investor behavior is evolving. The price approaching such a strategic level reflects increasing buying interest and bullish expectations among market participants. If this move is successful and the price establishes itself above the 200 EMA, it could signal not only a short-term rise, but also the beginning of a positive trend in the medium to long term. In technical analysis, such significant levels are considered trend boundaries. The 200 EMA in this context has historically acted as both resistance and support, serving as a reference line that has determined the price direction. Especially candlestick closes above this average are perceived positively by investors and strengthen the idea that the market may change direction and chart a bullish path. These structures also directly affect investment decisions, as many algorithmic trading systems and automated trading bots manage their positions based on the 200 EMA. When the price tests the 200 EMA level, the volume profile around this region should also be examined carefully. If there is a noticeable increase in volume while attempting to break this average, it supports the idea that investors place importance on this level and believe in the breakout. In other words, the price may be forming a consensus to surpass this level not only graphically, but also in terms of volume. This represents a scenario where technical signals are being confirmed by multiple indicators and increases the likelihood of an upward move. Crossing the 200 EMA is not just a technical move, but also the crossing of a psychological threshold. Prices trading below this line for an extended period are often viewed by investors as being in a bear market. However, when the price rises above this line, market psychology begins to shift. Investors who have been on the sidelines may start taking long positions again, short-term bearish expectations are abandoned, and a positive market atmosphere forms. This atmosphere holds great importance not only in terms of technical jargon, but also in behavioral analysis. Furthermore, a close above the 200 EMA is considered a trend reversal signal by many investors. As a result, the breakout of this level can trigger the FOMO effect. That is, investors may rush to buy in for fear of missing the opportunity, accelerating the upward move. If the price breaks this level and stays above it, it could signal the beginning of a new rally phase in the market. Additionally, the 200 EMA is considered a critical metric not only on daily charts, but also on weekly charts. A move above the 200 EMA on a weekly basis indicates the start of a much stronger and longer-term trend. If the price is currently about to break this level on the daily chart and is approaching it on the weekly as well, it can serve as confirmation of a bullish direction even on higher time frames. How long the price can remain above the 200 EMA is also important for the strength of this setup. Short-term wicks or sudden spikes alone are not sufficient. What really matters is whether the price can hold above this level and establish a new support zone. If this is achieved, the previous resistance transforms into a strong support zone. This facilitates a more stable and confident upward movement in price. In conclusion, one of the most notable aspects of the current technical structure is the price approaching the 200 EMA level, the attempt to break it, and the technical signals this generates, all of which provide strong clues about the market's direction. Such structures play a significant role in shaping investor decisions and serve a strategic role in identifying potential entry points. Therefore, the 200 EMA is not just an average line, but also a key threshold that could lead the way in reshaping the balance of power in the market. If the price surpasses this threshold, it holds the potential to trigger a much larger and sustained upward move. 200 EMA is used to observe the long-term trend.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.